So we had a big reversal day today in the stock market. We started the futures. The Dow Industrial was down to the tune of 1,000 points. The SPY futures were down almost 80 points plus 80 points. And all of that reversed at the end of the day. And we finished the Dow up 150. And we finished on the SPY positive as well, about 25 points. It was a big reversal day. Who was responsible for pushing the market higher and rescuing the market in essence? Let's take a look at a 15 minutes chart of the SPY. You can see that the buying started early on. The buying started as soon as the market opened and continued all the way up. This is the buy the dip crowd. And then the Fed comes out with an announcement here that they're going to buy individual corporate bonds on top of the ETFs that they were buying before. And that gives a confirmation to the move by the buy the dip crowd, and the market finishes higher. Now, I fired up this tweet in the morning saying that this is a make or break day for the buy the dip crowd, the bullish crowd. Either they're going to rescue the market, they're going to move in and buy stocks and close the stock market, the indices in the green, and make their marks known to everybody, or they're going to have to panic sell when it doesn't go their way and accelerate the move to the downside. Well, we know what happened here. They bought the dip, they bought it aggressively, and they have the appetite for buying the dip and pushing the market higher is still there. It's not crushed out of the market yet. With that being said, I remain with a bearish view because looking at the futures contract for the SPY, here's what I see. I see a big reversal candle to the downside and what many traders call a bear flag, a reaction from the bottom. So here's the big down move, reaction from the bottom, consolidation, and then a continuation for the primary move to the downside. Looking at the weekly chart of the futures contract, look at what we did here. Beautiful bounce off the moving average. Will it hold? We shall see how the weekend. I still remain with a bearish view that we're going to close on the red, but we will see how far that buy the dip crowd will get us. For me to become bullish, I want them to get us all the way to the top candle here and surpass it. Then I'll know that they're for real, that their appetite is not only here, but it's so strong that the market could actually go to all-time high. That's what I want to see. For this reason, I continue to buy the VIX, and I actually took advantage today of buying more VIX contracts at the end because it was cheaper, and we didn't go all the way down to the lower end of the bullish candle we had on Thursday. We closed at the higher end of the candle. That tells me in many ways that we had this big move, retraction, cocking the gun, going back up again. From a weekly perspective, the VIX chart, if you look at the MACD indicator here, it looks like we've made a bottom and we're curling back up to cross the moving average and make a bigger move to the upside before we retreat. And that's how I see it, that's how I'm trading it, and that's why if you watch my previous video, all I did today is just added to the 45 call contract and on the UVXY, and if the market goes to the downside tomorrow, I will sell a higher leg of the UVXY, the 55 primarily, or maybe the 50, and I will turn that into a debt credit spread hybrid where it ends up in a win-win, lose-win situation where I don't have to worry about losing any of my money. And I explained that in details in the previous video. When we look at the tech sector, the Qs, it looks a lot more favorable than the SPY or any other chart for that matter, because the demand for tech companies and for stay-at-home companies remains high. But here's what I see in the chart. We made a top here, we went down, we have a reaction, went down again, a reaction, and we're probably going to continue doing that and finally break this line on the downside. What is this line? This line goes all the way back. If we switch to the weekly look, it goes all the way back to December 18 low, and it was a clear trend line here. It got broken. We captured it again. It remained to see whether we're gonna hold it or break it and go down the downside. Certainly the way I see it for now. So there you have it, an hourly chart of the SPY action for today, starting from this candle right here, and you see that the buy the dip crowd pushed the market higher, bought the dip, the Fed helped them all the way up, and we closed in the green. This is bullish for now. However, the major bullish trend has been broken. This is a negative trend. And the likelihood is that even if we push a little bit higher, unless we close above the peaks of the chart, the hourly chart here, we're more likely that we're going to break down and go to the downside. In conclusion, we remain cautious, we remain bearish, and we continue to buy the VIX to protect our long portfolio, and we continue to short the rip in airline stocks and weaker stocks that are being pushed by day trading or in gambling activities. These names are weak, they have no merit to go up, and when you see it, when you look at the real charts in the economy and the recovery, specifically for the airlines, hotels, cruises, they don't look good. So we continue to short the rip in these weak names. That's all for this video. If you liked it, please subscribe, share, like, and I'll see you next time.